The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks for tuning in, starting your trading day off right here at TFNN. And we got markets picking things up in negative territory, but you catch a little bit of a lift. We have producer prices this morning following consumer prices yesterday. A little bit of a light number, actually unchanged on the month. We got that number at 8:30. You see a little volatility. Markets are a bit higher since we've had that number. You had Commerce Secretary Howard Lutnick on Bloomberg this morning. You have President Trump talking about 200% tariffs. You like French wine? Get ready to pay up. 200% tariffs in response to the tariffs on Kentucky bourbon. We'll get into that. Nonetheless, markets right now slightly in the red. S&P's off about 6 points, just under 5,600, trading at 55.98. NASDAQ 100, we're negative by about 0.2%, 50 points in the red at 19,566. The Dow, only index actually in the red yesterday. All the other indices catching a little bit of a bid. Dow a laggard. Dow this morning, negative by 0.1% or 40 points at 41,354, and the Russell is flat. Crude, backing off yet again, aiming for that $67 price point, 67.09, negative by about 57 pennies. Gold, relentlessly strong, man. Gold is making a run for those recent highs. And yeah, sustained volume to the upside. Yesterday, gold trades higher on almost 188,000 contracts, and we are about $20 away from all-time highs right now in that gold contract. You jump over to yields. And yeah, technical areas, folks, right? Put them on your chart. The 10-year, that was the number we were at about a half hour ago. Let's see where we're at right now. 4.34. We tick even a little bit higher. 4.34 is the yield right now on the 10-year. And you can see, right, where did we get to? About 4.13 as we had higher price, lower yield. We've double topped. We're backing off a bit. We have yields rising a bit, 4.34%. On the 10-year, we jump over to the dollar right now, and with rising yields, you catch some dollar strength at 104 on the dollar. There's your daily on the dollar. Now, again, technical areas, a little bit of a bounce back here in November, all right? But pretty remarkable. Everything since the election, right? Dollar included. Look at that run from 104 to 110 to 104 in the period of what, 4 or 5 months? Pretty remarkable action. We bounce a bit. But in terms of the larger trend, okay, you're getting a little bit of a reprieve today, but hard to imagine that we're going to get the acceleration. You know, markets are going to get a breather at some point. Yesterday's action, probably overdue in terms of a one-way slide. Every day we had negative territory. February 28th was the last real positive day we had, and you're only talking about a slight bid. I mean, nonetheless, we go forward. VIX this morning, 24.13. We've had a little bit of a rollover. Okay, we'll see how today plays out, whether we get some follow-through, but we're sitting at 24.13. And as you can see, again, technical area, quite a spike in the VIX to almost 30. We're trading at 24.12 right now. All right, we get producer prices at 8:30, as I mentioned. And yeah, we actually get an unchanged number. PPI, unchanged from a month earlier. They revised January for a 0.6% increase. Excluding food and energy, how about negative numbers, right? You exclude food and energy, the core number falls 0.1%, the first decrease since July. Core up 3.4% year over year. We'll see how these progress. Food prices up 1.7%. Energy costs down 1.2%. Had a great conversation with our man Teddy Kegstat yesterday. And one of the things he mentioned, great point, when you take a look at this crude contract, all right, because we had some decent CPI numbers, that CPI number yesterday coming in soft. Housing numbers were over half of the increase in the CPI was housing. One of the things helping the CPI is this crude number. You're talking headline, you're talking core, right? Fed prefers core. We're talking headline when you talk about energy prices, but it does matter. And again, we have crude bumping up against these lows. You like technical areas, folks, with your back against the wall? This is it in crude. And one of the great things about these types of trades, right? This is a nice area to be buying crude, period, okay? Yeah, you got a lot of risk. You better believe that there's potential for this thing to trade lower, okay? It's human nature, right? And so much of gambling, trading, okay, risk reward, risk aversion, greed, okay, comes into human nature. And part of human nature is to say, let's say, I was talking to Jacob about this yesterday or the day before. Human nature would tell you, my goodness, and again, this is a nice area for Tesla. It is, period. If you're looking for a bounce, that was it, man. Look at that touch, right? You should have been buying right there. Gets below it, you sell, okay? Now, human nature would say, my goodness, this thing was just at 488. How could you not be buying this thing when it was at 218, right? I never would have believed that Tesla would have went to 218, folks. If you would ask me on December 18th, tell me where Tesla will be by the middle of March. I said, I can get back some of the gains. Maybe it's a little overpriced. I'm not sure this rally since the election, all of it makes sense. Of course, some of it makes sense, right? Elon, many claim, is running the government. Wrongly so. Okay, he's not running the government. He might have a larger role than he probably deserves or is allowed to have. But to give it all back, well, you better believe that things can happen that you're not expecting. Period. End of sentence, right? You talk about the run. Another one where that really applied, I can't even find the pullback. It was so long ago. Let's go to a 5-year weekly. Was the Meta pullback. You go from 385, it gets cut in half. Never would have imagined $88. Never would have imagined $740. The market can always do more than you expect, okay? That's something you always want to remember. But when you look at crude, and crude's the best example of most of them all, because of negative prices. How about a barrel of crude for $6? And remember, folks, that's not where it went. We all remember crude. They were paying you to take barrels of crude. We didn't even know it could happen. People didn't even know that they could actually be held to a negative number. Okay? They were thinking, nonetheless. Do you remember those stories? They were buying crude in like the single digits, thinking that it couldn't go negative. Oh no, it could go negative. It sure could. All right. So the market can always go further than you think. But when you talk about prices, there's going to be some pushback on this level if we trade higher, and we'll see where crude goes. Hey, but one of the things to consider as well, because you find yourself saying, man, I would love $50 barrel crude, right? Give me $45 a barrel crude. Give me $2 for gas at the pump. It's the same thing for the Fed when they bring the rates down. Careful what you ask for, because the only way we're getting that type of price for crude is if the market is in big trouble. The only way we're getting rates that might save this market is if the economy is in big trouble. So that's the double-edged sword there, right? You careful what you ask for. Yields on the rise, actually, though, and that's what you'd want to see. Okay, in light of the data that we have, that is what you want to see. The last thing you want to see is yields plummeting and the cost of capital plummeting. Yes, it would help the economy if the Fed brings it down, and we get a Fed next week, which is remarkable. But man, we get some volatility coming in both ways. Stay tuned, folks. I'm coming right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. And as you see, I got the 10-year up here. And yeah, coming down to that price point. We've been here a couple times. And man, we got some movement on this chart. 110.15 right now, just below the lows we were at yesterday morning, coming into the lows of last Friday. And remarkable, you're a 1.5 higher. On Monday, on Tuesday, we were as highly yesterday, a half a point higher than where we are right now. But nonetheless, we have yields a bit higher, lower price, higher yield coming at you. Yeah, so interesting to see how tensions could ratchet up or ease, but ratchet up they be. And yeah, so we'll go here first. You might like California wine, but how about champagne? You know what? And if you're ever looking to splurge on some champagne but not go crazy, and yes, it's like the mainstream premium, but it's what I thought of. And you better get out and get some Veuve Clicquot if you're into it, man, because champagne's going up 200%. Potentially on the tariff, all right? Nonetheless, tensions rising, okay? And yeah, there's the Truth Social talking about the EU, 200% tariffs on all wines, champagnes, and alcoholic products in retaliation for the 50% tariff on whiskey. We'll see how it goes from there. Now, the other one that's on top of that one is the globalist Wall Street Journal. Yeah, anybody who critiques this president gets slandered. That's how it happens, okay? And it's politics. We get it. Nonetheless, yeah, Lutnick out there. And look at Veuve. Look at champagne. Look at that. The only thing you got to watch out for there is that champagne headache, man. Watch out for that one. Lutnick was out there this morning on Bloomberg, okay, and the market not moving as much as it has, and he's saying, Trump makes the decisions here. Here's what's happening, making the case for fair trade, right, is the case there, fair trade. And in many cases, reciprocal, okay, yeah, competitive advantages. You make the case that our car companies aren't over in other countries. Their car companies are obviously here. Auto tariffs, etc. Okay, so there's a lot of nuances that go into that debate. What I found so interesting was when he literally put a timetable on things, and folks, he was just throwing stuff against the wall, as we all do sometimes, as I do, okay? But he was talking about the last quarter being Trump's quarter when everything flourishes. And this game is a much longer game that they are playing. Okay, the uncertainty around 200% tariffs on certain industries, 25% on certain, 50% on one overnight. Tough to see certainty coming down the line in 6 months. And there's nothing backing that up. I really have my spikes up on the back on this one, Because sometimes, you want a generational shift in international trade policies and you want all that, and somehow that's going to play out over 6 months. Very difficult to imagine that that's the case. It's an easy case to be made right now, but it made me very skeptical. And that's not a technical indicator, but sometimes you want to pick up on that stuff. Because if there's a lot of pain to go right now and somehow in 6 months it's going to turn around, I don't think that makes sense. Okay? We have been on, didn't even plan on going into this, we've been on a bull run for 16 years. Okay? 16 years. The COVID pullback was so quick, you barely felt it. It was 6 months. And before you know it, you were enjoying marching to all-time highs. All right? You only had to experience a pullback, and it was harsh, all right, on the rising of the rates, but you only had to experience that one back to 3,500. And what made that pullback easier than some is that we all had just felt the pain of COVID, and that pullback didn't even get us to prior to COVID. So how harsh was the pullback when your market portfolio was still above your pre-COVID peak, which was barely 2 years prior? We've been on a 16-year bull run, which has taken this market tenfold, and we've only pulled back 10%. And so there is a potential with 200% tariffs, 25, 50, and at some point it will matter, right? At some point the CEOs will start talking if this is really hurting the market in that degree. But I just think it's spitting from the hip in terms of like, hey, give us like 6 or 9 months. And that's they're going to have the time they have. But I don't know why anything would change in 6 or 9 months. That's the part that's missing from that equation. What changes in 6 months? April 2nd, they're pretty harsh on reciprocal coming. Are they coming? We don't know. Do you know why we don't know? Because there's uncertainty. And maybe that's the best tool for negotiations, okay? But imagine the financial landscape of making decisions like that. And look at this chart of the dollar and look at the move we just got. So, yeah, we're back above 104, but, man, these are moves that matter. And they're usually not the moves that finish things. Reminiscent almost of that pullback of November of 2022, right? You got that huge pullback, you got a weak reprieve, and then what did we do? And then we traded from 108 down to 101 in the period of 2 months. So I think we have some big moves still coming in this market, man. Maybe we digest a bit. All right, let's check out the gold contract. Yeah, gold the same, man. I think we got, $400 to the upside in gold. I really do. I think gold is going to make the run. And you're going to do a nice A to B, C to D. Now that one brings you to 3,200. Yeah, I didn't go back far enough. And 3,350. So that's an A to B, C to D. You take this off the chart for a little bit of clarity. You break above with a nice solid break, the B point, and we're consolidating. And I think the dollar could be the same. because you get a pullback like that, that's going to be the wind at the back in that gold contract, man. Priced in a weaker dollar. We'll see it play out. All right, let's see how some of the equities are trading in the pre-market right now. Tesla shares. We're trading at about 248, basically flat this morning. Microsoft shares, flat as well. Amazon's been particularly volatile, slightly in the red at about 198. Meta shares, slightly in the green, 620. NVIDIA, up another $1, almost at 117 right now for NVIDIA shares. All right, and speaking of chips, Intel's got a new CEO, and the market likes it. Check it out, man. It's running again. You're going to open up $3. You're going to open up 15%, man. Yeah. They got a new CEO. We'll talk about this. We'll take a look at Intel when we get back. And he's going to keep the foundry business. That's what he says for right now. But the market likes it. Up 15% for Intel. We got markets in the red. We're coming back for the opening bell. Don't go away, folks.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. All the markets slightly in the red. S&P's off by 15 right now. That's about That's about 0.3% in the red. 55.88. Nasdaq 100 off by about 0.4%, or 82 points. 19,535. Dow off 158 right now. You jump over to Intel. Yeah, up 15% on their new CEO. And this gentleman is going to have quite a task ahead of him. The fourth permanent CEO at Intel in 7 years. They're averaging less than 24 months. So he put a note out to the workers. I was reading maybe on Bloomberg last night. It doesn't mention it here. But yeah, he put a message out or sent an email out. And yeah, they're going to be keeping the foundry business for right now. We'll see how that goes as they bump up against Taiwan Semiconductor. All right, we talked about our champagne. Yeah, you look at companies like Moe, right? LVMH. Those booze companies down about 3% on that news. You better believe it, man. 200% tariffs, right? Whoop. All right, you jump around to other equities with action. And yeah, Adobe, watch out here, man. Down almost 10%. Talking about this thing in the den last night. You're below where you were on January 13th. There's a daily. Look at these gaps, right? Every earnings. You can count on it, man. From 587 to under 400. Look at how you clawed it back almost. Boom, you do it again. They have some extreme volatility. Look at all these earnings gaps. From last March, boy, every earnings. My goodness. Probably heading back to 274, man. It's almost like a nice head and shoulders. Taking a few years. I'm in Basil Chapman. Whew. Yeah. What's to stop this thing from coming back, right? Right where we were in 2020, right where we were in 2022, and you're down more than 10%. Man. It wasn't completely disastrous on their numbers. They had earnings. They're talking about in terms of their forecast for the second quarter. Almost in line, almost, okay? Slightly on the bottom end. They're looking for earnings of $4.95 a share to $5. Market was looking for $5, and revenue slightly around $5.8 billion, which is what the market was basically looking at. But yeah, they're suffering to some degree. This market sells off a bit. Amazon down about 0.2%. Check out the usual culprits for volatility right now. Tesla down about 1.7%. NVIDIA gives back the pre-market gains right now. Microsoft slightly in the green. You have Apple shares down 1% right now. Meta shares down 0.5% right now. We check back in on Intel on their numbers. Yeah, big numbers, man. So we go a little bit bigger picture on Intel. That's what you like to see, right? Some nice momentum, a breakaway. You did it on February 10th. You come back. They got a new CEO now. And this is kind of what I'm talking about. As I was lining up some of those trades where you have your back against the wall, there's your area on Intel, man. You know, you're going longer term, you're willing to risk more, that's one thing. You're trading this equity, you have your back against the wall, you put your stop somewhere below this technical area, and that's it. And yeah, that was a nice trade. Coming into that technical area yesterday in the market, 2 days ago would be the number. And sometimes, folks, too, the thing about trades like this is that, yeah, sometimes you get a chop around, all right? You had 4 or 5 days down here in the beginning of February before this acceleration. But sometimes it's so quick. And look at this volume on the way up, right? Volume on the top. We back down. The only thing out here is the market. How do you buy into a market that's just cascading to lower prices? And there is that out there. All right, we jump around. Retailers, American Eagle. How about that one, man? I was going to say in the red after some tough numbers, and by the time I got to the chart, you were in the positive. Now, that one's surprising. They anticipate mid-single-digit drop in sales for the first quarter, and analysts were looking for a revenue increase. For the full year, however, it expects a low single-digit decline versus 3% growth. However, it reported an earnings beat. Yeah, I don't know. They're buying it nonetheless, American Eagle. Whew. Well, maybe a case of diminished expectations. That is quite a chart. But look at how we're bumping into some pretty... Wow, look at this chart. My goodness. Well, the only thing this chart says for American Eagle, if you're buying American Eagle, do not buy and hold. That's it. You know, whether you got up to the $20 area, the $25 area, look at this equity, man. Did you like American Eagle in the year 1999? Well, congratulations. You've broken even for 26 years of ownership of American Eagle. My goodness. This company in 1999 was a $2.2 billion company. And 26 years later, when the dollar is worth far less, it's a $2.6 billion company. Whew. Man, yeah, you know, it is remarkable, too. If you're in the market for some of these items that could be potentially tariffed to a dramatic degree, go out there and get them, man. It's not a joke. You want some Vouv, right? You want some fine champagne? Go out and get them. Because you're going to be purchasing items that are in the crosshair. And sometimes it's just unlucky. There's a lot of luck. There's a lot of timing. And you don't got to call it luck to that degree, right? But think about the fact that you got to know you're sitting in the champagne offices, right? And tariffs are getting levied on whiskey. And that's how things ratchet up, okay? And it's for what it's worth. Crude bumping up against $67, excuse me. Jump over to the dollar yen this morning. Backing off a bit to about 148 as that dollar sitting at about 104, 103.91 right now. And yeah, yield's continuing to push the highs at about 4.34%, the yield on that 10-year. Russell in the green, the only index currently up 3 points right now. Bitcoin, 82,000. We'll jump over to some of those crypto equities. Coinbase down another 3.2% right now. Robinhood down 3.2. Yeah, I wouldn't touch these, folks. It's one thing if you're trading them intraday or a day trade. MicroStrategy flat right now, up about 0.5%. All right, we got the S&P's negative by 13 right now. Stay tuned, folks. We'll take a look at some other equities. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets slightly in the red. S&P's negative by 7. We're trading just under 5,600 on a daily, just chopping around near the lows. Now, you did have volume trail off a bit yesterday, okay? We had the huge acceleration in volume come into this market on March 4th. You see it in the S&P's there. 3.25 million futures contracts traded on the ES. You back off a bit, and that was when we made a low of 57.44, okay? Volume was pretty consistent all the way until the lows till 55.34. Yesterday, the first day, you got a little bit of a reprieve on the volume, maybe a little bit of the selling, drying up in this market. Okay, volume lightens up a bit. Even if we trade, you're talking about needing a consolidation at some point. Okay, I went over yesterday, I believe, in this market, talking about, you look at even the ES, going back for something like a 5-year weekly, and you back to where we were in 2022, you get the pullback, you get a head fake higher, and then you really get the rip lower. Well, we've had the pullback. If it's going to be a dramatic move lower, you'd probably get a head fake. So be aware of those. That's the... Okay. Now, some great conversations in the Tiger's Den this morning, and this was a good one. Talking about, and this is from PLSHPT in the Den. How do we say that one? Is that initials? Is that some kind of verbiage? And this is talking about the housing price index for the U.S., going back to the 80s. All right. Now, what I found myself saying is, what if this is an A to B, C to D? Where do we go from here? Okay. Well, what if the A point starts at around 60? It's a one-way trip. Your B point was, of course, the pullback in the housing crisis, the financial crisis of 2008. You do a 320 A to B, you pull back to 310. A to B, C to D would bring you up to about 630, something like that. We're above it right now. We're at 690. The problem is we need more houses. Okay, period. I see it in Tampa, the acceleration in the heart of Tampa, remarkable in terms of the pricing over a period of even the last 10 or 12 years. But it's there. St. Petersburg, of course, okay? Even more so than Tampa. What is interesting, though, is then you go out a little bit further east. So I live in Lakeland right now, okay? And there are some extremely affordable properties, whether it's in Lakeland, whether it's in the surrounding areas of Lakeland and Winter Haven, okay? Many almost brand new properties for 275 grand, 300 grand, 350 grand, 375 gets you a 5.3, 375 grand gets you a brand new. Now, yes, it's a builder home, it's a cookie cutter home. You're going to be in a development that has 200 homes that are identical. Okay, you're all going to be on streets, they're all identical, but guess what? You're buying into a home that is brand new, 350 grand. They're probably going to help subsidize your rate if you're buying from one of the big builders. And within there, okay, you have a playground, and a lot of these developments even have a community pool. So in that context, now that's Florida that has land, okay? That's Florida in the middle of Florida. I've talked about earlier, there was a development next to us, used to be cow fields, okay? And this is in Bartow, Florida, right next to Lakeland, pretty much literally on the border. Used to be cow fields. I think it's like 1,800 homes got built, okay? 1,800 homes. Let me see if I can even find it on this map, because I was looking around. Let's see. Let's see if I can find it. Here we go. All right, perfect. So this is going on. So there's two sides of it, is the point of spending time, because, you know, and I'd love some feedback. Where do you have to go in the Northeast right now to find comparables to this area? So this is the area I'm talking about, okay? This is the entire area that got built out. This area that you're looking at, if you're looking at Tiger TV, okay, was all cow fields. We used to go to it all the time. Now they've built out an entire neighborhood. This is Darden is in here and Lennar, okay, I believe. Let's go, you jump around. And look at what we're talking about. A 3.2, 1,500 square feet, under 300 grand. You want a larger home brand new? How about 369 grand for a 5.3 brand new home? Okay. Now this, of course, is staged. Let's see if they have a picture of the pool that's in here, of the community pool. No, they don't. Shame on them. They're not doing it right, man, because this area has a decent community pool. We'd ride through there on the bike rides with Tommy. Yeah, we still got a lot of action going, Jimmy. I'm busy, but we got a lot of action going. We do. Everything is still in full swing. He's got a lot of lots. Tiger Construction's still going strong. Tiger Real Estate's going strong as well. And yeah, if anybody needs any questions, has any interest, give us a call, folks, for sure. Okay, that's the site development. I'll find the pool at the break. Let's see if these do it. Look at all these homes. All right, 284 grand, 289, and these are selling, man. People are in these all the time. So it's interesting. You look at that, right, and you see whether it's, you know, Florida gets the rep for being expensive, justifiably, man. Folks, here's when I moved to Florida, and I'm an old man now, sadly. When I moved to Florida 20 years ago, okay, I'm going to be 45 in a week. And I remember moving down here and going to dinner with my dad shortly after I moved down, and it was my 25th birthday. Can't believe it. 20 years I've been down here. And when I moved down here, right, the rent for a one-bedroom, one-bath condo in a complex in Largo, Florida, 15 minutes from Clearwater Beach, with a pool in the complex, my rent was $500 a month. Coming from Boston at that time and being 24 years old, where I, even with a decent job coming out of Villanova University with a degree, very difficult to afford rent, especially where you wanted to be in Boston in 2005 at that time. I was sold, man. Now that doesn't exist anymore. Okay, 500. But depending on where you were, this does exist. And I challenge you to, you know, and this is, folks, Lakeland is a hugely growing area. And you can see why. Okay, these houses are selling like gangbusters. This came from nothing. I saw it from the beginning. All right, absolutely great homes. They're all brand new. You're getting it at 300. They're subsidizing your loan. So how does that play into the environment, right? What it plays into is that's why you still have people moving to Florida. And shame on these. They don't have the pool. I'll pull up the pool. It's a beautiful area, but nonetheless, I find myself thinking of that. But boy, you jump over to the stocks of these builders. Yeah, it's a tough one, man. Look at Lennar coming back down to the lows. Lennar down another 0.5% right now. DHI, DR Horton. These are the two builders. They're the one I was just talking about, folks. Okay? And they've been doing this for like 3 or 4 years. So this is part of the run-up, right? They were the only game in town. You see why. But still, they're facing some heat. Tariffs, one of those things. Markets melting. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Negative we go across the board. S&P is off by 0.6% right now. We're negative by 32 points. The pre-market lows just below where we're at right now, and you're dropping. The volume coming into this market to the downside, it's been all red since we've opened at 9:30. NASDAQ 100, boom, just like that. We're below the pre-market lows, off 1.1% for the NASDAQ 100 right now. You jump over NVIDIA down more than 1%. Amazon down 2%. Got to watch out in this market, man. Look at these moves, right? What is Amazon doing dropping 2%, right? There are a lot of unknowns in this market. Market participants are not used to and definitely don't enjoy trying to price unknowns and uncertainty in this market. My goodness. Apple shares down 0.8%. Oof, Meta down by 3% right now. Google down by 2%. And yeah, so going back to the housing for a minute, and this is the beautiful pool. And listen, folks, I'm not, this is just a lot of people, you talk about houses, everything's unlivable. This is a beautiful, robust area. Now, this is about 40 minutes from downtown Tampa. Okay, a little bit long if you're working in downtown Tampa when you're out this far, about 40 minutes. Okay, so that's a long commute. But where in Boston can you get a brand new home for $275,000 with a community pool, a community playground, and you're 40 minutes outside of the city? So there are avenues when you look at it, right? That's the pool. You talk about a little play area, and then you go down to the houses that are available, and that's just a glimpse. A 5.3 with 2,700 square feet, 372. They're beautiful homes inside, and they're brand new. So, you know, and as far as the insurance costs go, because it's a great point, you know what they do have, okay, and I'm going to spend some time, I'll pull it up tomorrow, is they have all these fees inside. And they even go beyond an HOA fee that have to do with the infrastructure build-out of these developments. So that's something that we'll get into, okay? Watch out for the monthly fees, and they go beyond HOAs in some of these units, because what they do is they give you a fee for the structural build-out of the whole community, dependent on the type of home you buy. And that's always a big part of those negotiations, and that's why they can bring down the costs, because they push off the cost of the infrastructure to you, the buyers. Folks, market's in the red. Stay tuned. Basil's coming up. Have a great day. We'll see you tomorrow, everybody. Have a great one.